So a lot of people dream about becoming multimillionaire overnight. But here's the thing, the fastest way often comes with higher risks. Sure, some get lucky, but for the majority it's a gamble that leads to losses. And trust me, I speak from my own experience. So before you go all in, consider this quote. The stock market is a mechanism for transferring wealth from the impatient to the patient. So if you are looking for a smart, sustainable path to serious wealth, this video is for you. But if you are after a quick, risky win, I would suggest skipping this video. For everyone else, stick with me for the next 10 minutes and I will show you why so many investors swear by VOO, the Vanguard's S&P 500 Index Fund ETF, and why it's so popular among most investors. Alright, what exactly is VOO? VOO is an ETF or exchange traded fund created by Vanguard. It tracks the S&P 500 index, which includes 500 of the largest companies in the US like Apple, Amazon and Tesla, for example. And here's why this matters. Diversification. Instead of betting on one stock, you are spreading your investments across multiple sectors, tech, healthcare, finance, you name it. And the best part is you can buy and sell it every day because there's a lot of liquidity. And what about the returns, Maurice? That's a good question. VOO has averaged over 13% annually in the last decade and 14.5% in the past 5 years. And that's insane. Imagine your money doubling in just a few years while you sleep. That's the kind of growth we are talking about. So beside great returns, why is VOO so popular? So here are 3 most important reasons. Number 1, low costs. With an expense ratio of just 0.03%, VOO is one of the most cost-efficient investments out there. Think of it like filling a glass with water. The lower the cost, the fewer holes in the glass, so more water stays in. That's more of your money compounding for you instead of leaking away. But first, if you enjoy videos like this and want to discover smarter and faster ways to build your wealth, even if you are not there yet, be sure to subscribe to my channel and stay up to date. Number 2, dividends. The VOO pays a dividend yield of around 1.2%, and this is important because these dividends grow over time, adding a steady stream of passive income for your portfolio. Number 3, trust. It's a Vanguard product, and Vanguard is one of the most respected names in investing, managing over $1.3 trillion in assets. So let me ask you this question. How much more confident would you feel knowing your money is growing with some of the biggest, most stable companies in the world? Now, the second question is VOO the right fit for you? And that's why I've made a quick checklist for you. Number 1, if you want broad exposure to the US stock market, VOO is perfect. If you prefer a buy and hold strategy where your investments grow over decades, VOO has your back. And here's the good part, even Vanguard rates VOO as moderately risky, meaning it's great for those investors who are comfortable with market ups and downs. But here's the big question. Do you have the patience to let compounding work its magic? If yes, you are in the right place. So how to start investing in VOO? Getting started is simpler than you think. So the first step is to decide how you want to invest. Number 1, dollar cost averaging. Invest a set amount regularly, weekly or monthly. The benefit of this choice is that it removes emotion from the equation. Number 2, lump sum investment. Got a larger amount saved up? Know that markets go up 75% of the time, so investing it all at once can maximize returns if the market is trending upward. And a pro tip, if you are in the US or in Europe, use tax advantages like Roth IRAs or 401ks. These accounts protect your gains from taxes, meaning more money stays in your pocket. And then we go into the tax advantages. So why are tax advantages accounts a game changer in the US? Here's an example. In a Roth IRA, your investments grow tax-free and you pay no taxes when you withdraw in retirement. In a taxable account, you will owe taxes on dividends and capital gains, which eats into your returns. And let's be honest guys, wouldn't you rather have your money working for you instead of going to Uncle Sam? Reinvesting dividends is a game changer. Historically, the S&P 500 returns about 6.3% without reinvesting dividends. But with reinvesting dividends, that jumps up to 10.4%. By reinvesting, you are buying more shares, which leads to more dividends, a compounding snowball effect. So then I hear you thinking, but Maurice, how much of your portfolio should you allocate to VOO? And that's a good question. And here's what I would recommend. At age 18 to 35, go big. I would invest 100% in stocks because the focus is on growth. Dollar cost average during downturns and go for the long term. At age 36 to 50, a balanced approach of 50 to 100% in stocks like ETFs in the VOO works for you. At the age of 51 plus, play it safe with 10 to 50% in ETFs like VOO. From here, it depends a lot on your financial plan to decide the best approach for you. But here's the golden rule. Align your investment with your goals. VOO can be a strong core holding for any portfolio. And secondly, VOO is amazing, but pairing it with complementary ETFs can enhance your strategy. So here is my top 4 picks what you can do to compare the VOO. Number 1, growth ETFs. Add more exposure to, for example, tech-heavy sectors like AI, for example. Number 2, dividend ETFs. Boost your passive income and think about high-paying dividend companies like SCHD. And then number 3, international ETFs. If you are living outside of the US, maybe you want to broaden your reach globally even more and spread your investments internationally. And then number 4, specific stocks. If you want to take some more risk but also reap the benefits of smaller individual companies, this is only if you know what you are doing. Then you could buy individual stocks. Then a pro tip, use ETFRC.com to check fund overlaps and avoiding doubling down on the same stocks. And then the next, one of the most common questions I get a lot is, when should I sell VOO? And my answer is always the same. Ideally, never, unless your goals change. Don't sell because of short-term market drops. That's how impatient investors lose wealth. And do you remember my quote from the beginning? The stock market is a mechanism for transferring wealth from the impatient to the patient. So VOO isn't just an ETF. It's a gateway to financial freedom if you're going to invest for the long run. It's simple, it's reliable, and it has a proven track record for the long term. But if you are looking for more diversification or want to spread your risks even further with high-paying dividend ETFs, check out my next video where I explain my optimal 3 ETF portfolio for the best returns in the coming years. If you found this helpful, like this video, share it and subscribe for more investing insights.